Have you noticed something strange happening lately? Because while the entire market keeps focusing on Nvidia, Tesla, and the biggest AI names, another semiconductor story quietly started forming during Trump's China visit. And the interesting part is, most investors completely missed what this actually signals for the AI chip industry. Trump's China trip is not just political news because it is happening at the exact moment when artificial intelligence, semiconductors, and global supply chains are becoming more important than oil or traditional trade. And whenever politics and chips collide, the stock market usually starts to move before the headlines fully make sense. And this is where things get interesting, because the company we are talking about today is not the obvious AI stock everyone is already watching. In fact, most retail investors are still focused on Nvidia and Microsoft, while another semiconductor player is quietly sitting inside the same global narrative. Because right now, the US and China are fighting for AI dominance, and semiconductors are at the center of that battle. That means any company connected to both AI growth and China exposure suddenly becomes extremely important in this environment. While most headlines focused on big tech CEOs, one thing investors missed is how deeply certain chip companies are tied to China's massive consumer tech ecosystem. And that exposure can become a major advantage or a major risk, depending on how geopolitical tensions evolve. Because even small improvements in US-China relations can unlock huge business upside for companies sitting in the middle of both markets. But on the other hand, stricter trade restrictions can instantly change growth expectations across the entire semiconductor sector. And that is exactly why this situation matters, because the company we are discussing today is directly exposed to both AI development and China's smartphone and technology industry. But here is where the story shifts, because this company is not just a traditional chip supplier anymore. It is actively transforming itself into an AI-driven computing company focused on smartphones, laptops, cars, and edge devices. Now, before we go deeper, let me be clear. When most people think about AI, they imagine massive data centers and cloud computing. But the next phase of AI is something very different. It is called Edge AI, where intelligence runs directly on your devices instead of distant servers. And if that trend accelerates, the companies building chips for billions of devices could become just as important as those building AI servers. Now here is the turning point in this entire story. The company we have been discussing this entire time is actually one of the most overlooked names in the semiconductor industry right now. That company is Qualcomm Inc. Yes, Qualcomm, the same company most people still associate only with smartphones and 5G, may actually be positioning itself for a much bigger role in the global AI race than most investors realize. Because Qualcomm is no longer just a mobile chip company. It is actively expanding into AI-powered PCs, automotive systems, smart devices, and next-generation computing platforms. One of its biggest strategic moves is the Snapdragon X Elite platform, designed specifically for AI laptops and next-generation computing devices. And this is where another major player becomes important in the story, because Microsoft is also pushing aggressively into AI-powered PCs. That matters because if AI laptops and AI PCs become mainstream, Qualcomm could suddenly open an entirely new revenue stream far beyond smartphones. And markets tend to reward companies that successfully expand into new high-growth sectors. And unlike many speculative AI companies, Qualcomm already has real global customers, established revenue, and deep semiconductor expertise. That makes its AI transition story much more credible compared to hype-driven stocks. This is also why some investors believe Qualcomm could quietly become one of the more underrated AI beneficiaries in the market today. It does not get the same attention as Nvidia, but sometimes the biggest moves start where attention is lowest. Now let's talk about valuation and positioning, because this is another key reason Qualcomm is gaining attention. Compared to several high-flying AI stocks, Qualcomm still trades at a relatively more reasonable level, especially considering its global reach and technological exposure. And this matters because institutional investors are constantly looking for AI exposure without paying extreme premiums. When crowded AI trades become expensive, money often rotates into secondary AI beneficiaries that still have strong growth potential. But Qualcomm's opportunity is not limited to smartphones or laptops. One of its fastest-growing segments is automotive technology, where cars are rapidly turning into AI-powered computing systems. Modern vehicles now rely heavily on advanced chips, real-time processing, intelligent driving systems, and constant data communication. And this trend is expected to grow massively over the next decade. Qualcomm has already positioned itself inside this shift through automotive partnerships and intelligent driving platforms, meaning it is connected to multiple AI growth stories at the same time. Now combine all of this with rising geopolitical tension, semiconductor restrictions, AI competition, and Trump's China visit, and suddenly Qualcomm becomes far more interesting than most investors initially believe. Because this is how major stock narratives begin, attention shifts slowly. Institutions start positioning early, and retail investors usually arrive much later when momentum is already built. However, there are still real risks. Competition in semiconductors is extremely intense, with companies like Nvidia, Apple, and MediaTek all fighting aggressively for dominance. And geopolitical tension between the US and China could continue to create uncertainty for the entire chip industry. At the same time, smartphone growth has slowed compared to previous cycles, which means Qualcomm cannot rely only on its traditional business anymore. That is exactly why its AI transition is so critical for long-term growth. Because if Qualcomm successfully evolves into a broader AI computing company, the long-term upside could be very different from what the market currently expects. But if it fails to scale its AI strategy, it may remain stuck in a slower growth semiconductor cycle. This is why investors are watching every signal connected to AI, chips, and global politics so closely right now. Because the companies that control future AI hardware could become some of the most important businesses in the world. And after Trump's China visit, semiconductor stocks are once again at the center of global discussion. Not just for technology reasons, but because chips are now directly tied to economic power and geopolitical influence. That is why Qualcomm's position suddenly looks much more important than it did only a few months ago. It sits at the intersection of AI growth, China exposure, mobile technology, edge computing, and next-generation devices. So while everyone continues focusing on Nvidia and the biggest AI headlines, the real opportunity might be developing one layer deeper. And Qualcomm could quietly be one of the companies benefiting from that shift. Because in the stock market, the biggest moves often begin before the story becomes obvious to everyone. And Qualcomm may or may not become a major AI winner, but after this China-driven narrative, it is definitely a stock worth watching very closely. And now the final question is simple. Is Qualcomm Inc. actually one of the most underrated AI plays right now, or is Nvidia still untouchable in this entire AI revolution?